Good evening. Good evening, ladies and gentlemen. Can you please stand as the procession is about to enter the venue? Thank you.
Good evening, everybody. Please be seated. So my name is Ingrid Willard. I'm the Dean of the Faculty of Economic and Management Sciences, and it's my great pleasure to welcome you all here this evening, both those of you online and those of you here in person. But a few very special welcomes, starting with our rectorate, Professor Stan du Plessis, Professor Nico Koopman. Thank you so much for being able to attend. A warm welcome to, I need to look and see where he's seated. Where's Ada's dad? Sorry, a very warm welcome to Mr. Southgate, Ada's dad, and to Jacques Jansen, Ada's husband. Lovely that you can join us this evening. Is Betsy Stoltz here? Betsy is online. A very warm welcome to Betsy, an old colleague and mentor and confidant of Ada's. So very warm welcome to those special guests. But of course, a welcome to everybody else. I see many members of the faculty here, and both in person and online. So this evening, we're celebrating the professorship of our colleague Ada Jansen, the 22nd professor in economics in the 103-year history of the economics department. So the first professor was in 1920. If my list is correct, and I'm hoping that either Johan or Stan will correct me if I've erred in my list, but if I have it correct, Ada is the 22nd professor, the 4th female professor, which I think is a wonderful accomplishment. So we're here tonight to celebrate with Ada, to hear about her work. So an inaugural lecture is an opportunity for a new professor to share their expertise with a group of non-specialists. And that's always quite a difficult act to accomplish, to get it perfect, that you can both sound proficient and accessible. But we know that Ada will do great justice to that. So I'm going to hand over to Professor Estienne Karlitz, who's going to introduce Ada to the audience. Thank you, colleagues.
Good evening, ladies and gentlemen. Goeienaand, dames en heren. Moweni, manene, manenekazi. It's a great pleasure for me to introduce Professor Ada Jansen this evening. Now, Ada belongs to a breed, a subspecies of the human race that is very highly acclaimed for their accuracy in forecasting. That is called the economist. And they say economists were created to make weather forecasters feel better about themselves. But I must admit, in recent times, we've been trumped by load-shedding forecasters. Professor Jansen has traveled far and wide. She is a seasoned tourist in the academic world. She started off at the University of Western Cape as an undergraduate student. Later on, she moved to Stellenbosch University, furthered her studies. At a later stage, she registered for a PhD under the supervision of a Norwegian professor. And when he untimely passed away, she was finalizing her PhD under the supervision of Professor Servaas van der Berg. Her employment journey is equally interesting. After almost 11 years as a lecturer at the University of Western Cape, she was appointed at Stellenbosch University, moved through the ranks, and recently was appointed as Professor of Economics, as we heard just now, the 22nd Professor of Economics in this Department of Economics at Stellenbosch University. But it's not only her journey in employment, it's also a journey in various other fields that I need to share with you this evening. An academic is judged by his or her contribution in three ways: as a teacher, as a researcher, and as someone that, on basis of their knowledge and expertise, renders a service to the community, but also within the university. And Professor Jansen is well known and highly regarded for her teaching capabilities, and also undergraduate as well as postgraduate. Her teaching has been mostly in public finance, and within that field in taxation. Now, a puzzling thing for me is someone that did a PhD on water management in urban areas in South Africa with specific reference to the Western Cape and Cape Town. How does a person like that end up migrating into tax? A very famous, world-famous economist, John Maynard Keynes, had the answer. Tax evasion is the only intellectual activity that generates a return to the pursuant. So that is why we have Ada engaging in tax research. And her career has a lot to offer on account of that. If you look at Ada's research activities, it culminated, her research journey, in fact, culminated in obtaining a C2 rating from the National Research Foundation in South Africa. Now, that basically means that she is recognized by her peers for her expertise and for the quality of the workload in that capacity. And peers are not only local peers, but also international peers. So we have the honor today to listen to her contribution that she also will engage in future times. Now, I must tell you a bit about Ada's research capabilities. She published in a number of journals. Now, some of us are only fortunate enough to be accepted in one journal, but Ada has published in the South African Journal of Economics, Development Southern Africa. She's published in Econometrics, a Journal of Economics and Econometrics. She's even published in Water Essay. Now, she must tell us what she was able to tell those people when she published there. If we look at Ada's contribution to service delivery, it is also an interesting reading. She has early on in her career at Stellenbosch University impressed with her management capabilities. And her appointment recently as chair of the economics department is also a recognition of her proven capabilities in this regard. And also in my experience with her, she's always on time, she always meets the deadlines, and if you happen to be in the surrounding, you'll also meet it. And she has this partnership approach to management, which makes her a very staunch leader in the university and in the department. She also contributed by way of participating in committees that had to consider PhD applications. She also served as a coordinator for postgraduate students in the department, and also as a coordinator for PhD studies in the department. Her most challenging recent experience is to deal with the results of the external evaluation, which the department was exposed to in recent times. And that is really an important challenge for her as a head of the department, chairperson of the department, because what she will be leading by way of direction going forward will have a major impact on the teaching offering that students will get in the department, but also on the opportunities that there will be for research. And in the faculty economics department has excelled in recent times in terms of research output, for which we are grateful and which certainly is to the benefit also of the university. With those words, I want to say that clearly Ada's journey is full steam going ahead. And we trust that she will enjoy also the opportunities which the chairmanship of the department offers. Met daardie woorde, dames en heren, wil ek graag vir Ada nooi om die intrerede te lewer as 22ste professor in die departement. I want to invite Ada now to give the inaugural address as the 22nd professor of economics at Stellenbosch University. Ada.
So good evening, everyone. Firstly, let me acknowledge the Deputy Vice-Chancellor, Professor Koopman, our Chief Operating Officer, Professor Du Plessis, the Dean of the EMS Faculty, Professor Woolard, the Vice Dean of Research of the EMS Faculty, Professor Graham, Professor Mark Smith, who has also joined us this evening, the Director of the Stellenbosch Business School, and then all my colleagues, my friends, my family that are all here this evening. Thank you for coming and joining for this momentous occasion. For my lecture this evening, I've decided to give you a collage of my research in the field of taxation, instead of discussing a specific topic. But first I want to spend just a few minutes of a word of thanks to specific people that have influenced my career and that have really made a difference in my life. To the Dean, Professor Woolard, and especially to the former departmental head of the Department of Economics, Professor Andries Skumbi, thank you very much for your guidance and support of my career at Stellenbosch University. To all my colleagues in the economics department, and especially my co-researchers, and I'm going to name a few, Estienne Karlitz, Krige Siebrits, Sophia Duplessis, Winona Stein, who's online, I hope, from SARS, Vanelli Ngumeni from SARS as well. I thank you for your continued support in our research endeavors. To three prominent mentors in my life, Professor Liep Loots, former chair at the Department of Economics at the University of the Western Cape, who started my journey in economics. The late Professor Carl Erik Schulz from Norway, who helped me to believe and strengthen my abilities to continue my path in studying economics. And then to Professor Servaas van den Berg, who helped me to reach the goal to complete the PhD. To the team who made this evening possible, especially Jonathan Dale Blankenberg, Amira Sunday, thank you for your patience with me and your kind assistance. To everyone present, in person and online, friends and colleagues for supporting me, and finally to my parents and to my husband for being patient with me throughout this long journey and supporting me to achieve my aspirations in life. Thank you very much. So I'm going to start by just focusing a little bit on the slide, the title, Tax Revenue and Development in South Africa. Is it really two sides of the same coin? I commence this lecture with a brief interlude of taxation, and I want to just highlight some historic perspective on taxes. In their book, Rebellion, Rascals and Revenue, by Michael Keane and Joel Sremrod, two prominent international public finance economists, they highlight the importance of taxation since ancient times. And two of the examples that you see, or that is referenced here, is the Rosetta Stone, which was uncovered by Roman soldiers in 1799, and it contained the same text in 3 different scripts. With the understanding of the hieroglyphics, it became evident that taxation was the most important text worth carving out in 3 scripts. And you will know that the Rosetta Stone, the description there was a tax break that was given to the temple priests of ancient Egypt. And this just gives you just a brief glimpse of the importance of taxation, but also that tax exemptions are as old as taxes. Now, if I move along and I look at the historic perspective from a South African, within the South African context, what you will sort of see in this slide is that tax was implemented right from the beginning of the starting point of South Africa, going right back to the historics. So within this context, taxation was implemented as early as the commencement of the activities of the Dutch East India Company. And in a paper that I co-authored with Johan Fourie and Krige Siebrits, we analyzed the types of taxes the Dutch had implemented as part of our examination of the nature of the tax system. And at the time of the establishment of the Cape Colony, we identified one category as general taxes, which included teeth taxes, which was a tenth of the harvested grain, and another as local taxes, which was the poll taxes, and it was based on property ownership. This was the oldest tax of the Cape Colony, originally used for the slaughter of wild beasts, and therefore known as lion and tiger money. And at the time, there was already evidence of a progressive tax system, with wheat and wine producers who paid more taxes, who paid progressively, and so the richest paid more than, for example, those that earned less, such as the cattle farmers. Now, fast forwarding to today, this lecture will elucidate why modern-day tax policies in developing countries do not necessarily achieve the best outcomes for development, And since most of my research focuses on the South African tax system, I will use local examples. By way of introduction, developing countries generally aspire to achieve economic development and raise living standards. If we consider the Millennium Development Goals of 2030, key priorities are to reduce inequality and poverty and ensure well-being by realizing developmental outcomes such as good health services and quality education. Now, these outcomes are obviously also priorities in South Africa. I start this lecture by answering yes to my question, but will add some caveats later to this initial response. Now, tax systems have multiple functions, not least generating revenue. And to achieve state-building capacity and advance developmental goals, governments must raise sufficient revenues to fund expenditures and implement programs to achieve more equitable outcomes. Revenue mobilization, therefore, is at the top of the agenda of tax policy makers, who must ensure that the tax systems are designed or reformed with minimal impact on the tax-paying public. In this regard, revenue mobilization, together with tax efficiency and tax equity, constitute the key components of an optimal tax system. It is well known that people do not like paying taxes. And we know that tax policies usually elicit some response to mitigate the tax burden. For instance, the question we can ask ourselves, do we buy the same number of bottles of wine when excise duties are increased year on year? And as Jean-Baptiste Colbert, Comptroller General of Finance under French King Louis XIV, famously stated, the art of taxation consists in so plucking the goose so as to obtain the largest possible amount of feathers with the smallest amount of hissy. Now, if we raise sufficient revenue at minimal efficiency cost while having socially acceptable regard to the fairness, developmental objectives may be achieved. South Africa's tax system has been designed with similar objectives in mind. In an interview with the Daily Maverick, the Commissioner of the South African Revenue Service, Mr. Edward Kieswetter, clearly stated the importance of raising revenue and ensuring increased compliance with the tax system, and emphasizing the key role of a well-functioning revenue management system in ensuring adherence to tax laws. Government aims to raise maximum revenues and ensure that taxpayers comply with tax legislation. Now, South Africa has a well-developed tax system, and what you see on the slide is some statistics from a very prominent publication that is published jointly by National Treasury and SARS, which is the tax statistics. And what you see is basically the ratio of the tax to gross domestic product, which was published for the 2021-2022 tax year of 25%. Compared to other developing countries in Africa, South Africa's tax collection performance is relatively high and leaves less room for new taxes or higher tax rates. But here comes the first caveat. Are we raising revenues as efficiently as possible? In other words, are we maximizing revenues without causing unnecessary welfare losses in the system? In spite of the relatively high tax to GDP ratio, South Africa can still improve its revenue-raising capabilities. Given South Africa's current economic outlook and the constrained fiscus, it is imperative to consider to what extent we can still mobilize revenues from existing taxes without increasing the tax rates. Now, one aspect of my research that I believe holds potential in identifying precisely where tax policy reform should take place is knowledge of tax gaps. What do tax gaps entail, and why is it important to know about them? Now, conceptually, the tax gap refers to the difference between what ought to be collected, given the tax base and the concomitant tax rates, and what is collected. Typically, there are two types of tax gaps that are relevant, namely the compliance gap and the policy gap. Now, the former is typically associated with evasion activities. Now, how are these gaps relevant to tax revenue mobilization? Knowledge of both of these tax gaps can indicate where tax authorities should direct their attention. Now, later on, I will talk a little bit more about the policy gap, because that is basically legislated. And so the question is, can we improve our tax revenue collection by looking at reforming what is known as the policy gap? How do we address that? And I will talk about that within a minute. Now, my research on tax compliance gaps in the corporate non-financial sector, conducted in association with my SARS colleagues, has revealed significant amounts of revenue that are not accounted for in the system. We use tax administrative data from SARS, and we combined it with macroeconomic statistics to estimate the aggregate tax gap over a 3-year period. We found an estimated tax gap for the non-financial sector of the economy of around 2% of GDP. Our research method is called a top-down approach, which basically implies that we have used macro data and we've combined that with tax administrative tax return records of companies to produce one composite estimate. Applying a different approach would entail having tax audit records, which is referred to as a bottom-up approach. And this will actually give much more accurate estimates of what that tax gap is. So this is undertaken in advanced economies, and normally you would see publications for England on an annual basis where they estimate these gaps. So further research in this regard is required in the South African context. Moving on to other policy reform options to generate revenues, one could consider removing or substantially reducing tax expenditures that erode the tax base. Now, tax expenditures are immediate candidates for this kind of pruning. And those ones that I'm referring to are the tax incentives, because companies do not generally sort of invest by only considering what the tax or the tax incentives are. And companies would have done business in any event with or without such tax benefits. So these tax incentives, which are specialized tax provisions that allows for a deviation from the general provision on investment projects so that the effective tax rates are lower than those for other projects, should really be looked into for further, in terms of further research. And what I have looked into is to consider to what extent we can actually reform the tax incentive system to improve outcomes for tax revenue collection. Of the 44 sub-Saharan countries that Sebastian James, a World Bank tax specialist, has surveyed, 80% of these countries offered tax holidays. And that's a complete tax exemption, which means that they do not pay any taxes at all. Now, while working with the World Bank, there's a lot of statistics on the slide, but I'll focus only on the yellow marked one in my discussion. Whilst working with the World Bank on estimating marginal effective tax rates for the various sectors of the economy, it dawned on me that we should carefully consider these incentives. Now, marginal effective rates show us the impact of tax incentives on the decision to invest in an asset. One example that you see that is marked on the slide is the marginal effective tax rate of 19.6% for the manufacturing sector, which is much smaller than the 28% statutory corporate income tax rate at the time that the study was completed. So the results reported in this study showed that corporate tax incentives must be revisited. And subsequently, what has happened is that there has been some sunset clauses added to some of the tax incentives. But there's still some work to be done on this front, as it is quite evident that tax incentives rarely influence direct investment in isolation. A further focus in the area of tax expenditures, legislated concessions to pay less tax, is recent work, again with SARS colleagues, in which we consider whether tax expenditures such as retirement fund contribution deductions may be altered to achieve developmental outcomes. So using a microsimulation model underpinned by individuals' tax records, we find that additional tax revenues can be raised by converting the retirement fund contribution deduction to a tax credit, similar to recent reforms that we've seen in the case of the medical tax benefit. This means that instead of deducting your pension fund income from your gross income to get to taxable income, you deduct it from your gross tax liability. Therefore, even though there's still a tax incentive to contribute to retirement savings, the additional tax revenues raised by this conversion can be put towards priorities in the main budget. Turning to another component of the tax system, I want to stress the importance of tax administration in augmenting efficient revenue mobilization. Recent findings support the research of my PhD student, Onesmo Mackenzie, suggest that African countries are not optimizing the efficiency of their tax administrations. Using data envelopment analysis, this study reveals a disparity in the performance of tax authorities and suggests that they can improve their performance by adopting institutional reforms. Now, a caveat I wish to add to my discussion on the equivalency of tax revenue productivity and development is the following. Raising the funds is all well and good, but if appropriate choices are not made on the expenditure side of the state's budget, coupled with the institutional and administrative capacity to execute them, the links between revenue and development will be broken. If these issues remain unaddressed, having a well-functioning tax system, while necessary, would not be enough to attain development. This illustrates the importance of a holistic approach in pursuing developmental goals. A further focus of my research was in the efficacy of the equity role of the tax system. Although economists have contrasting views on whether the tax system should be used for this purpose, there are many examples in most countries' tax systems. One that we know well in South Africa is the progressive income tax system, in which higher income earners pay higher average tax as the incomes increase. The principle of vertical equity applies. Those with the greater ability must pay more. Another is VAT zero rating. Certain foodstuffs are then freed from paying VAT, and this is done to minimize the tax burden for basic products for poor households. South Africa's VAT system also includes tax expenditures, and VAT zero rating implies that taxpayers will therefore not pay any VAT on foodstuffs such as brown bread, rice, vegetables, and fruit. My research with Estiaan Kalitz into the cost-effectiveness of VAT zero rating looked into identifying the benefits that would be achieved versus the cost, the foregone revenue that we are sacrificing because we also give the benefit to higher income earners. And so what you see on the slide, again, just the yellow marked statistics, is really giving you an idea that the benefit to the first 40% of the poor households is much smaller in absolute amounts than the higher income earners. However, considering the political feasibility, some tax reforms will obviously channel tax policy along a different reform path. And this leads Slemrod, as I've mentioned, an international public finance economist, to conclude that if the politics of taxation prevent a certain reform, other options must be considered to achieve similar outcomes. I end my lecture with a brief look at my latest research focus on behavioral tax policy. As mentioned earlier, people respond to tax policy. We need to know what drives this behavior. So in a step towards determining what motivates taxpayers to contribute to the tax pot, preliminary research completed with my colleagues in the economics department, Sophia and Krige, we have now looked into asking SU staff members, and they've completed a survey for us on their concerns about taxation. What the research has revealed is that taxpayers are concerned about problems in our country, such as corruption, but they feel obliged to comply with the tax laws, and they also do so because they have a redistributive concern. So these preliminary altruistic results bode well for Mr. Kieswetter's tax compliance drive, and in a broader sense, for the development goals of our country. That is the end of my lecture. I thank you for listening to me this evening, and watch this space. There will be more tax research. Thank you.
Ladies and gentlemen, good evening. It is with an extraordinary irony that I received an email this afternoon from the accountant whose services I procure a few times per year to help me with my tax, who informed me that to finalize my submission for the last tax year will require another payment on my part. And I took some consolation from the words of Adam Smith, who reminded us in the second book of The Wealth of Nations that subjects of every state ought to contribute towards the support of the government as nearly as possible in proportion to their respective abilities. That is, in proportion to the revenue which they respectively enjoy under the protection of the state. And that is the sentiment with which Professor Jansen ended her lecture. Our normative understanding that we have an obligation to our society, expressed as it is in our willing compliance with the tax code. But there is more to say about it. The matter of taxation also reminds me of the comment, and here I don't see Professor Jafta here this evening, but she would have recognized the words of Bastiat. Bastiat said that, let me just find his words here, the difference between just taxation and legal plunder is an important question in ethics, dating back to at least St. Augustine, who raised the question of the difference between just kingdoms and great robberies in the city of God. Now, I mention these ideas of St. Augustine because my own journey in economics started so very closely with St. Augustine through the lectures of the wonderful Professor Sampi, who started his history of economic thought with the city of God. And this evening we heard that the history of tax goes back even further to ancient Egypt and even further to ancient Mesopotamia. Indeed, it is not false to say that we as humankind invented writing to comply with our tax code more so than with anything else. How appropriate that this lecture then is here in the bowels of the School of Accountancy. One might even say the very origin of letters here on our campus. And here in the Western Cape too, the VOC, even though not a state, immediately proceeded with a tax code. Isn't it wonderful to hear about lion and tiger money, and even better to hear that it was progressive? It is right, as we heard this evening, that the tax code is not disconnected. In fact, it is closely connected with the development objectives of all societies. And in that sense, it is a really important policy matter. We have to get it right. We heard this evening that in the case of South Africa, we have already a very well-established and indeed very substantial tax base. That is a success. We should be proud about that. Of course, it also has the somewhat discouraging message that there are not many other low-hanging fruits out there in the tax policy reform area, although we heard some ideas at the end of the lecture where there are still some, especially on the compliance gap. Now, the compliance gap we heard this evening could be to the extent of 2% of GDP. That would be an amazing addition to the fiscus in South Africa, and perhaps it's even smaller after my email this afternoon. I can assure the colleagues from SARS online that they will receive my payment very quickly. It is important for us as a Department of Economics that we have scholars that engage carefully with the study of public finance generally and the tax code very specifically, especially also so that our students can get exposure in this area and themselves can make an important contribution. My impression is that the post-94 story of the administration of public finance in South Africa benefited tremendously from enthusiastic young economists who really rolled up their sleeves and worked both in SARS and in National Treasury with a real dedication to improve the quality of taxation and compliance within our country. And that has given us the opportunity to make great strides precisely on that equity principle that we heard towards the end of the lecture, where we know we have a country in which we have some of the most sustainable and substantial redistribution via the tax code of any country with a comparable level of development. That's a success of the tax code. I remember meeting the then Deputy Minister of Finance in 1994 at a function. This was a period in which our tax code still required much development, especially tax compliance required much development. And the then Deputy Minister told me that they were seriously considering computerizing SARS. And I thought, well, not a moment too soon. Since then, it has become a very sophisticated operation and much to the good of our society. So it is a real privilege to have listened to Professor Jansen this evening. You know, as a university community, it is a joyful evening to host an inaugural lecture. It's joyful in the life of a scholar, and it's joyful in the life of the university community. And the task of the professor after the inaugural lecture is threefold. It is to remain a student, to study with your students and to learn with your students, and especially to lead your students through your example and through your scholarship. It is also to advance scholarship, and we heard the wonderful promise at the end of the lecture that there will be more to come, especially in this case of Professor Jansen on matters related to tax and public finance more broadly, and especially also to make your scholarship relevant to the broader community, as you have already done. And then finally, and that is to serve the university in the Senate and here in the faculty, and in the case of Professor Jansen, very particularly in the Department of Economics, where she is also the head of my department. The professors in inaugural lectures share their scholarship with a wider audience. We are grateful for this accessible introduction to your work on tax and tax compliance in South Africa, Ada. And we're also grateful to see where you are heading with your scholarship. That's also appropriate for an inaugural lecture. It needs to be a heenblik op die toekomstige werk van die student en ons is baie gelukkig om dit te kon sien. So I conclude, first let me award you the certificate and then I will say a few words of conclusion. Congratulations. Finally, ladies and gentlemen, allow me to say a few words of gratitude. Firstly, to our host, the Dean. Thank you, Professor Willard, for inviting us all here to the Van der Ster building to listen to this inaugural lecture. And after the conclusion of these events, there are some refreshments outside, and we're also very grateful for those. I'm very grateful for our colleagues in corporate communications and in the Registrar's Division who go to great lengths to make these joyful events possible. They work very hard. They sometimes prod the professor a little bit so that we can all enjoy a wonderful evening. And so I want to thank our colleagues, Jonathan Dale, through you, to all of our colleagues. And now, ladies and gentlemen, thank you also to you who attended and our colleagues online. I'm very grateful to see that our colleagues from SARS also joined us this evening, as well as former colleagues from the Department of Economics. It's wonderful to hear that Betsy is online. Now I invite those of you who are here to join us for refreshments and those of you who are online to open your own bottles of wine. Good evening.
Thank you, Prof. Can you please stand as the procession is about to leave the venue now? Thank you so much. Enjoy the refreshments.